What's up, guys? Today I'm going to do a video on the volume profile. I've been wanting to make a video where I can go a little bit more in depth on this tool because it's a major part of my trading strategy. I use this in conjunction with ICT concepts, but even before I was trading ICT, I had a measure of success using the volume profile all by itself. It's the first tool that I used that I really ever had any kind of breakthroughs in my trading. So it's very important. I use it to this day. And these two things really marry each other very well. So I've been wanting to make this video, and what we're going to do is I'm just going to define it first, give an overview of how it works, and then I'm going to explain how I use it in my trading, because the volume profile is not like other indicators. There's a wide range of ways that you can use volume profile, but I'm going to go over how I use it specifically in my trading, and we'll go over like a trade I took maybe this week where I used the volume profile and it was a major component to the strategy. So yeah, let's just get into it. Okay, so first thing we're going to do is define what the volume profile is. So the volume profile is a visual representation of the volume at each price level over a certain time period. So there's a few major components to the profile. First off, I want to say we are going to disregard the low volume node and the high volume node. These are not things that I use in my strategy with the profile. Now, they could definitely be beneficial to people. And if you are interested in the volume profile, I'm more than happy to send you some links where you could get a better education on those things. They're definitely worth noting and understanding, but just to keep this video brief, we're not going to go over those too much. So the main components that I'm using are the value areas and the point of control. So to define the value area, this represents the price range with the most trading volume and participation over the specified time period. It indicates where the majority of trading activity is concentrated and is considered the fair market value. Now, simplifying that, these are the areas in price that have the most volume conducted there. So you have three levels. You have the value area high, which is the highest part of the range with the most volume. You have the value area low, which is the lowest part of the range with the most volume. And then you have the point of control. The point of control in most cases lies somewhere in the middle of the range. And this is the price level that has the overall most volume conducted within that trading period. Okay, so like I was explaining before, there's a multitude of ways that you can use a volume profile. You can pull a profile over just about any specified time period that you want. But the way I use it specifically is I am looking at the previous day's volume profiles. I'm marking off those levels. So that would be the value area high, the value area low, and the point of control of the previous day. And I am using those levels to kind of help give me context on where we are trading in the current day's price action in relation to those levels. So real quick, I'm just going to show you guys how I mark those levels off. So you can use the indicator SVP, that is the session volume profile. So here, let me take this off and just hit it again. So session volume profile, this indicator will automatically pull all the profiles of each given trading day. So if you can see right here at the start, 1800 hours at market open is when the new profile begins, and it closes back at 1630, right when the market closes. And then it opens up again, and then we make a new profile. So every single day I will come in here. Let's say, this is the new trading day. So we're starting here at 1800. I'm going to mark my value area high, low, and point of control. So the way you do that is you're going to look at this histogram. And if you can see the portion here that is not highlighted and the portions here that are highlighted, this is your value area right here. Let me, right here. This is your value area, this highlighted portion. And your value area high is right here where the highlighting starts. So I'll mark that off as previous day's value area high. This red line is the point of control. So again, that is the level that has the most volume conducted at it over the entire trading day. So we'll mark that off as previous day's point of control. And then our value area low is right here, right below. Also, I should say, when I'm marking off these levels, I'm using a 30-minute time frame. These levels can change depending on what time frame you're looking at. So if you see here, there's a bit of a discrepancy in the levels with the point of control specifically. The 30-minute time frame is, through my testing, the most accurate, and it's what most of the classic profile users use. They'll use the 30-minute time frame. So I would recommend don't deviate from that, at least in the way that I use it. Just use the 30-minute time frame. You'll get the most accurate levels. Okay, so first thing we're going to go over is how can we use these levels to give us context on the current day's price action? And can it give us a directional bias, and can it give us levels to trade off of in that direction of our bias? So a couple of rules of thumb that you can look at is, okay, where is the current day opening in relation to our previous day's value areas? So for example, we're in the replay mode right now. I'm just gonna move a couple of bars forward. So this is the end of the trading day, and this is the profile that we're gonna be looking at. So let's hit a couple bars. So this is market open. So first things first, we know, okay, the market opened below the value area low, below the point of control. So as of right now, we could remain bearish, because if we're opening and trading below the value areas, it means there's weakness in relation to yesterday's price action. So this is the Asian session. I don't trade Asia, so I'm not really looking at this, or for me at least, there's not much that I'm going to do here in the Asian session. I'm just going to see how it plays out. So, okay, right here, we're coming into London session. Now, we had a nice 30-minute bar up, but does that mean I want to be bullish? I could maybe look for longs and trade towards the point of control. And I could go over how you could use the point of control as a draw on liquidity. But first off, in a more simple format, we're going to look at, using the profile to give us a directional bias with like a standard rule. So the rule could be, if we're trading below previous day's point of control, we want to remain bearish. So London session, we're starting to move up. And let's see how price reacts at the value area low and the point of control. So we're coming up, we tap the value area low. We have a minor rejection, nothing too significant. And we're looking at the 30-minute time frame right now. We'll probably zoom in a second, but let's just see what happens at these levels. Okay, so right there, 30-minute time frame, we come up and we tap the previous day's point of control, and we fail to close above it. Now remember, we want to keep a short bias as long as we're holding below the previous day's point of control. So then we can maybe go to a lower time frame if we're day trading. Okay, so we're at the previous day's point of control. Let's see how price reacts here. I know I want to look for shorts, so this might be an area that I'm going to scout for shorts as long as we hold below. So we have a nice 5-minute bearish engulfing candle. This is where, maybe you can use the current strategy that you have and try and find a short at one of these levels. Look at that beautiful rejection right at the previous day's point of control. I mean, perfect rejection. That is a great short right there. And that is just simply using the previous day's value areas to give you a rule of thumb to want to maintain a short bias as long as we hold below the previous day's point of control. So we just play the rest of the day out. Let's see if we continue to reject. And we have another rejection down. So that's just a really simple way you can use these levels to trade rejections off of. See if we're rejecting the point of control. If we are rejecting the point of control, we can try to find a short here. Really simple. Okay, so now that we went over like a basic rule of thumb on how you can use the profile, So for example, what we went over, if price remains under the previous day's point of control, we can look to be bearish and look for shorts. Now, we went over a very obvious short entry after retesting and rejecting the previous day's point of control. That's probably the most obvious short here in that day. But if you missed this, that doesn't mean that you still can't take shorts if you have an entry signal. So now I'm going to go over a trade that I took on this day using these concepts and also marrying ICT with the directional bias that I got from the profile. So first off, we're just gonna minimize the profiles now because I'm not trading with these on all day. I really just use it to mark my levels and then I keep that indicator minimized and I'm just looking at the price action. So this is where we left things off and we had the rejection at the previous day's point of control, a retrace, and another move lower. So this is 10 a.m. right now. Now, I took a short a little later in the day. Now, this is where ICT concepts are going to come in and they can help me find an entry. So let's go to the 15-minute chart. So if I remember correctly, I took my short around 11 a.m. or maybe 12. Let's see. So price is still moving lower. Now, I'm looking for a draw on liquidity, right? I think overall, we are going to be coming down to take these lows and fill the imbalance left down here from the 23rd. So that's my higher time frame draw on liquidity. We have our directional bias for the day that we're going to look for shorts as long as we remain under previous day's point of control. So I can't short down here because it's just too low. I'm sure we're probably going to get a pullback somewhere. So I want to look for a pullback to get an optimal trade entry and then look to catch the down move and continuation. So this is where ICT concepts come in. So what are some levels that I can look to take shorts here from the 15-minute time frame? Well, we have this 15-minute fair value gap right here. And we have the order block, or sorry, the breaker block sitting right on top of it. So we have a fair value gap with a breaker block right on top of each other. So this was the level I was looking at. If we were going to catch continuation shorts, I wanted to short up in this area. So let's go down to the 5-minute and let's just see how price continues to play out. Remember, we have a higher time frame draw on liquidity right here with the imbalance below. So right now, this is 11:30. So we're looking for that retracement, right? Now we don't want to short here either. We want to short once we engage with the fair value gap that I'm looking at. So we have a rejection there. I wasn't ready to short here in this consolidation. I felt like we might dig further up, and I just wanted to get some more context on how the price action is developing. So, okay, once we got here, this was like the moment of truth. I wanted to see if we were going to get 5-minute closures, disrespecting the fair value gap. As long as we did not close above the fair value gap, I was ready to look for shorts. So still, if you could see, no closure above the fair value gap and the breaker block. And this was my short entry right here. As soon as we failed to close above, and then we got a 5-minute candle rejection, I entered right there at the close of that candle. Now, I targeted a standard 3.3R on my trades with crude oil. I'm usually looking for a minimum of 3R on my trades. So we had a 15-tick stop loss, 3.3R take profit, 50 ticks just at about these lows. And this stop loss was safe to me because if we were going to close above the fair value gap, the trade would be invalidated for me, at least for the short term. So let's see, we got a nice rejection immediately down. Right about here, I went break even. So once the trade went about 1.5R in my favor, I went break even right here. And I just let the trade play out, and it was very clean delivery straight to my target. And we continued lower too. We ended up taking out these lows. And that was about the end of the day. You know, after this, crude oil just kind of consolidated for the rest of the day. But I was able to catch the last short continuation move using ICT concepts in conjunction with the directional bias that the volume profile gave me. So even though I wasn't able to short up here, I didn't get the best entry. And I also missed this entry, which was a pretty good one. I was still able to get my short using these concepts at the end of the day. And yeah, that was a just quick, really simple trade recap on how I used all of these tools in conjunction with each other. So we're going to end the video here. If anyone has questions, you know, hit me in the DMs, comment on the post. I'm more than happy to go over it more. I have a lot of content that I could point you in a direction towards about the volume profile. And yeah, more than happy to answer questions, guys. Thanks.